Hi, this is Behind the Contracts, and I'm Cheryl Rickard. I am a South Florida real estate agent, and I'm here today with Brian Sachs, and he is in the mortgage business for more than 30 years, and we're here, I know, right? And we're here to talk about what's going on with the rates. What's going on here?
Well, it's really simple. They're only going in one direction, Cheryl. They're going up. But up is very relative. So, you just said I've been in the business 30 years. It's actually closer to 40, which scares me.
Oh,
I guess that's why I have all the white hair, right? But the reality is, when I started the business in the 80s, rates were 18%. And you know what? People were still buying houses.
They sure were.
So look, here's the truth. 4 is the ugliest interest rate in the world when it's coming up from 3 to 4. It's the most beautiful interest rate in the world when it's coming down from 5 to 4.
Exactly.
But it's still 4. So rates are still excellent. It's a great time to buy. It's a great time to sell. It's a great time to refinance. Rates are likely to continue to go up this year.
How high do you think they'll go?
Oh, you want a crystal ball, right? So I think rates will probably end the year around 5%.
Wow. Okay.
And that's okay. What the Fed is trying to do right now is calm things down. We have very high inflation.
Yes.
There is an affordability gap right now. So home prices, if you're a seller, you're loving life, right? Home prices going up. What a great time to sell.
Correct.
If you're a home buyer, not so much. You're not loving life so much.
Mm-hmm.
And many contracts, I just heard an interesting statistic in South Florida. 42% of sales last year were cash sales. Cash.
And they're still
cash.
Yes.
So, you really have to be in a situation where you're getting pre-approved, where you have a loan in place, you got all of your ducks in a row. Don't worry about the interest rates. You buy when it's the right time for you to buy, and you sell. I do think you should sell. You should sell when it's the right time to sell. This may be that right time.
What about first home time buyers? What about them?
First time home buyers, again, they're experiencing some challenges. Millennials, we waited and waited and waited for millennials to buy homes.
Right.
They're now ready to buy homes, and yikes.
They can't afford it.
It's tough. It's really tough. And
what about the multifamily?
Well, to me, this is the best kept secret in real estate.
Mm-hmm.
Okay, so let me ask you a question.
Okay. Here we go.
How would you like, let me ask you a question. Okay. How would you like to buy a property, have someone else make your mortgage payment? Now, let me be clear. That person isn't writing the check to your mortgage company.
Right.
But how would you like a situation where you can buy a house, have your mortgage payment covered, have an additional set of income, and have huge tax write-offs? Would you love that? Would you love that? Of course you would love that. What a stupid question, right? But here's how it works. If you're buying a 1 to 4 unit property, and I know that this is something, Cheryl, that you have expertise in.
Yes.
Right? If you buy a 1 to 4 unit property, well, let's look at it. Let's say your payment's $2,500 a month and you live in one of the units and you have 3 other units paying $2,000. Look at that, right?
Right.
So now you're taking in $6,000. Your mortgage payment's $2,500. It's covered.
Right.
And you've got $3,500 to go do whatever you want with.
Right.
And because you've rented out those other units, you get a tax benefit because you're a landlord. Now, let's talk about the cons for a second.
Okay.
You are going to be a landlord. So if I'm living in your building and my toilet breaks, that's on you.
Exactly.
Right? But what a great situation. I'll tell you the other great situation right now is, I've been saying this to my wife, Cheryl, for 30 years. Ugly is beautiful. Ugly is the new beautiful. Okay. And here's the reality. There are many homes on the market right now that need a little love.
Right. The renovation.
They might be in good shape, but they're ugly.
And old.
And old.
Yeah.
I've seen homes that aren't hurricane proofed. I've seen homes with purple cabinets. Mm-hmm. I even saw a home that had the green shag. Remember the green shag
and orange?
Yeah, there you go.
Right.
So the reality is that and this is, I have to say this because we're the #1 renovation lender in the United States.
Yeah, which is amazing, especially in South Florida right now because of what's going on. There's not a lot of room to grow as far as new home construction. Right. Everything's being either knocked down or renovated.
Right, exactly. And think about this. You can buy a home and we will lend you the money to buy it and to do the renovations. So, I just checked out some builders. You know how long builders are taking? A year to a year and a half to deliver the property. And guess what? Prices are going up the whole time.
Yeah.
So that's a little scary. You might be in a better situation finding a really ugly house, or it doesn't even have to be ugly, just one that needs to be updated in a great neighborhood. And we'll lend you the money to buy it and renovate it. What does that mean? It means you choose the cabinet color. It means you choose the carpet. It means you choose the granite or whatever you're putting on the countertops. You can make it a beautiful home without needing to go to a builder necessarily.
Mm-hmm.
And you can make it whatever you want it to be. And we can help you do that. And so can you.
Exactly.
And by the way, that house will probably be a little bit below everything else that's gorgeous.
Exactly.
So you walk in with some equity. I think it's a great opportunity. The multifamily and the renovations are a phenomenal opportunity in this market.
And the fact that you guys are experts and the #1 in the United States doing it is
that certainly helps, right?
Yes, it certainly does. And how about the self-employed? What about that? The 1099 loans? I know you were talking about that.
So we're in a gig economy.
Mm-hmm.
So
explain what gig economy means.
Right. When I was growing up, a gig meant that you had a band performance somewhere and the band had a gig somewhere. But here's the gig economy. The gig economy means, look, we've just had what we called the Great Resignation. Because of COVID, people haven't gone back to work. And many employers and restaurants, especially, they're taking it on the chin, right?
Plus, people are deciding, what do I really want to do in life? I don't really love that job I was in.
Yeah.
And I'd like to take some time and fill in the gap with different jobs. So right now, that's what's happening.
It's so true.
Yeah.
And so, as a mortgage lender, when we see folks who are doing Uber, or they're doing DoorDash, or they're doing some other, let's call it outsourced job, we usually want to see a 2-year history. I have many Uber drivers and they all seem to make like 80, 90,000. Always.
Okay.
But they write off 70.
Right.
Okay. In expenses because they have to pay for the car and the gas and the this and the that. And by the time everything's done, they have no income.
Right.
So there are now programs for folks. And look, no one should pay more taxes than they have to. I mean, that would be stupid.
Exactly. Okay. And that's another show.
Right. That's a whole other topic, right? Whole other topic for another day. But there are programs out there where we don't necessarily need to see your tax returns.
Okay.
We can average 2 years of your 1099s and just take off a flat 25%.
Okay.
Or for expenses, if you're self-employed, one of the things we can do is not get your tax returns and just look at your bank statements.
Okay. Right.
So the point is, if you're self-employed, give Cheryl a call. If you're a gigster, give Cheryl a call.
I know what it means now.
And there are ways. Don't exclude yourself without getting knowledge. What Cheryl and I are trying to do, especially Cheryl, is really just impart the knowledge to you, because the way you make correct decisions for yourself is really understanding the options. And Cheryl's whole channel here is all about sharing with you that knowledge and what those options are. And
what the ups and downs. We all go through things, and just some of the other people that are going to be on the show are people that have gone through some of the downs. And you know what? We all go through them in life, but in real estate, in any kind of business, you're going to have some downs also. So we're going to discuss those things also. But
it even rains in Southern California and
sure
Southern
does.
Florida
and
too.
Southern Florida, but not today. It's bright and sunny out.
There you go.
So, anything else to say? Actually, one other thing I wanted to ask: what is the FICO score that you should have to do some of these loans? What is a really healthy FICO score right now?
So I'm going to give you the lamest answer you could possibly
get. I know,
get.
for what, 740?
It depends. It depends. So look, A perfect credit score is 800. A terrific credit score is in the sevens.
Okay.
A good credit score is in the sixes. In the fives and fours, people are looking for you.
Okay.
There's people out there trying to find you
Yeah.
and contact you. The reality is, let's, and we'll have a separate show just on this.
Okay. Sounds
Okay.
great. Mhm.
But just because you have a low credit score doesn't mean you can't get a mortgage. Okay. I mean, we can go down into the sixes, fives
Right.
sometimes. But I'll give you a little tip on the fastest way to get your credit score better.
Okay. Let's hear.
Okay. One of the things that impacts your credit score the most is recency and usage. So, excuse me. A lot of people will close credit cards they don't use. Don't ever do that. Ever do that. Because the age of your credit matters. When you close it, your score is going to go down, even if you don't use it. Leave it in your wallet, your purse, a shoebox, whatever. Don't close it. The other thing that affects folks, even if you pay on time, is your balance to your credit. They call it usage. So if you have $1,000 credit card, and a lot of people will get rewards points or air miles or whatever. If you have $1,000 credit line and you charge it up to 1,000, and every month you pay it off, you never pay interest. You will not have good credit.
Really?
You want it to get to 300, never go above 300, a third. So if you have $1,000 credit line, never charge more than 300. Nothing will kill your credit more than that. It has about a 30% impact on your credit score.
Wow.
So if you and I are sitting here and I pay every month on time, but I charge it to the max and you don't pay at all,
Right.
you're always late.
Right.
Okay. And this is fictitious, of course.
It's not true.
But right. But let's just say you don't pay, but you keep it to a third, your credit score will be better than mine. Even if you pay late.
Really?
Yeah, crazy.
Wow. Well, we'll definitely have another show just about credit scores.
We've got a
what
lot
we
to
can
talk
do.
about. Absolutely.
There's a lot to
So
talk
how
about.
do they reach you, Cheryl?
Well, you can reach me. My phone number. Actually, I'm going to put that down in the bottom of the YouTube channel. And also you can find me on Sherrillsells, and it's SherrillSells. That's my Instagram, and I'm also on TikTok. And like I said, I'll put my website down on the bottom, and that's with Exp Realty. So that's how you can get me. And how about you?
And, I'll tell you, if you have questions you'd like to see Cheryl and I cover, or just Cheryl, which is fine too, just, type it in the bottom here. And of course, always feel free to share this with someone you think might benefit from it. And you can reach me at bsacks, SACKS at homebridge.com, and certainly happy to answer your questions.
And I'll put that down in the notes also at the end.
Okay.
All right. Well, it's been amazing. And thank you for coming to my first episode of Behind the Contract. See you later. Bye.